silver has just shocked the global markets. In late December 2025, silver blasted through historic price levels and hit a brand new all-time high, around $72 to $73 per ounce. That's not just a rally, that's a market event. In less than a year, silver has more than doubled in value, leaving investors asking one explosive question: is $100 silver next? In this video, we break down what's driving this historic surge, why it's happening right now, what top experts are predicting, and the serious risks investors must understand. 2025 has been a phenomenal year for silver. Early in the year, silver was trading in the $30 to $40 range, but by December it surged above $70, delivering gains of roughly 150% year-to-date. Silver futures have climbed about 133% in 2025, while gold is up around 69% in the same period. Axios noted that both gold and silver are on track for their strongest annual performance since 1979, fueled by a massive rush into safe haven assets. For historical context, silver's previous nominal record was near $50 in 1980, a level briefly revisited in 2011, but the current rally has now pushed silver far beyond those past highs. This rally is being driven by a perfect storm of powerful factors. First, supply shortages combined with surging industrial demand. Analysts point out that silver has been running in an annual supply deficit for years. At the same time, demand is exploding from cutting-edge technologies, including solar panels, electric vehicles, data centers, medical equipment, and advanced electronics. In 2025, the United States officially added silver to its critical minerals list, highlighting its growing strategic importance. Second, massive investment demand. This year saw record inflows into silver-backed ETFs. According to analysts, silver ETP funds attracted over 4,000 tons of inflows in 2025 alone, representing tens of billions of dollars in fresh buying. Retail investors, institutions, and funds are aggressively chasing momentum. As one strategist put it, this rally is very much investment-driven, supported by strong fundamentals. Third, macroeconomic tailwinds. The US dollar has weakened sharply, down about 10% in 2025, making dollar-priced silver cheaper for global buyers. Inflation has also started to cool. US CPI for November came in at 2.7%, below expectations, while unemployment edged higher. This has strengthened expectations for Federal Reserve rate cuts in 2026. Historically, lower interest rates and a weaker dollar are extremely bullish for precious metals. Analysts note that cooling inflation reaffirms the Fed's easing path, directly supporting metals demand. Finally, geopolitical tensions are adding fuel. According to Reuters, U.S. actions against Venezuela, including a declared blockade of oil tankers, along with ongoing tensions in the Middle East and Eastern Europe, have pushed investors towards safe haven assets. When global uncertainty rises, capital naturally flows into tangible stores of value like silver. Expert forecasts: how high can silver go? Given this momentum, many strategists believe silver still has upside. Some are calling this move a generational breakout. One Wall Street analyst expects silver to climb into the mid-$70s by the end of 2026, assuming U.S. interest rates decline as expected. Another trading desk strategist says precious metals have been hitting the accelerator pedal and believes silver could target $80 per ounce within the next 6 to 12 months, noting that once key psychological levels are broken, momentum often carries prices higher. Even more aggressive forecasts are now emerging. Several commentators are openly discussing $100 silver. A bullion expert interviewed by CBS News stated that if current demand trends continue, with central banks and retail investors hoarding silver, a supply squeeze could push silver beyond $100 during this bull cycle. Another analyst noted that when adjusted for inflation, silver's 1980 peak would be close to $200 today, making a $100 target far more realistic than it sounds. A commodity strategist in India recently echoed this view, suggesting silver could reach $100 by 2026, driven by green energy and technology demand. Risks, volatility, and reality check. That said, silver is not a straight-line trade. It is one of the most volatile major assets. Many analysts warn the market is currently overbought and vulnerable to corrections. The gold-to-silver ratio has collapsed to around 64, signaling a potentially overheated market. A strategist at a major firm cautions that once investor excitement fades, silver could underperform gold. Historically, silver often moves 2 to 3 times more violently than gold in both directions. There are also practical risks. When prices spike, large amounts of scrap silver, old jewelry, and coins tend to flood the market, increasing supply and slowing rallies. Industrial demand could also soften if manufacturers find substitutes or reduce usage. On the macro side, if the Federal Reserve delays rate cuts or inflation reaccelerates, real interest rates could rise, hurting precious metals. A sudden rebound in the US dollar would also pressure silver prices. We've seen similar pullbacks before, including in late 2023 when metals cooled after the Fed paused. Veteran traders describe silver as a two-sided, high-risk market driven by speculation, geopolitics, and monetary policy. Sharp pullbacks are common, even during strong long-term uptrends. For U.S. investors, silver is accessible through COMEX futures, ETFs like SLV, and mining stocks. Many investors have already locked in significant gains in 2025. Those still holding should recognize that safe haven demand from hedge funds, retirement accounts, and institutions could remain strong if Fed easing continues. Silver's new classification as a critical mineral also means U.S. policymakers and industrial buyers may maintain long-term demand. Still, balance matters. Many investors are using this rally to rebalance portfolios, taking partial profits into gold, cash, or other assets. Financial planners consistently warn against going all in on any single commodity. Because silver typically moves 2 to 3 times more than gold, it offers big opportunity, but also big downside. Watch Federal Reserve signals closely because even small policy shifts can trigger major price swings. Here's the bottom line. Silver's late 2025 rally is real, historic, and fundamentally driven. A weak dollar, expected Fed easing, booming industrial demand, and global uncertainty are all pushing prices higher in the near term. Many analysts now see $80 silver in 2026, while a smaller group believes $100 is possible under the right conditions. But caution is critical. The charts are stretched, volatility is extreme, and sentiment can shift quickly. When today's excitement cools, silver could slow down or even lag gold for periods. Stay informed. Respect the volatility. Watch key support levels. Silver may still shine, but only disciplined investors will survive the swings.